So, given the many interesting events that has been unfolding in the Chinese market recently, it really makes me wonder, as an avid Chinese investor, why is China destroying itself when US on the other hand is consistently building up their debt, printing trillions of dollars of money, propping up their economy, and have most, if not all of their stocks hitting all-time high. Of course, I'm speaking about good stocks. So welcome back to our weekly update by your part-time clown on YouTube, which is yours truly. So in this video, I'll just be outlining what China has done over the last week and essentially just tell them what are the repercussions of their actions. And in the conclusion, I'll just be explaining why I think China is destroying themselves in the last 3 months or so. So before I start, I did create a Discord channel for all you bulls and bears of Alibaba. It's definitely a platform for you guys to discuss, debate, or even dispute different theses or different arguments. The primary objective of the Discord channel is really to create the entire network effect for people to share different articles, share different viewpoints, and for people to just create a community surrounding Alibaba, whether you love it or whether you hate the stock. I think we are all welcoming. So if you're interested, please click in the link in the description box down below. On top of that, I've also left my referral link for both Tiger and Moomoo brokers. They're essentially a China brokerage firm that they're expanding aggressively worldwide, especially in the Singapore and Southeast Asia region. So for those of you who haven't created, what are you waiting for? Ultimately, it's best to just earn the free money, right? With that, let's get right into today's topic. So as we all know, the last 6 months hasn't been as glorious as Chinese investors. They essentially stopped Ant from IPOing, and then they removed Didi from the App Store just days after the IPO, and launched a multitude of investigations on big companies like Alibaba, Tencent, Didi, Meituan, etc. And then they also signal that there'll be more regulations to come for all these big Chinese tech companies in 6 months or so, which is the second half of 2021. So it really caused a lot of investors to be extremely jittery because they do not know what's going to happen and what to expect. And whenever there's uncertainty, there'll be more volatility because investors detest uncertainty to its core. So after going through all these different crackdowns and this intensified scrutiny to all these different big companies in China, they will definitely be expecting retaliation from the SEC. And in this case, the SEC did retaliate. So the SEC's chairman's response, which is Gary, he asked agency staff to seek specific disclosures, called for additional reviews of filings for companies with significant China-based operations. So he said that, I worry that the average investors may not realize that they hold stock in a shell company rather than a Chinese-based operating company. Funny thing is, for those of you who are holding Chinese stocks and not know about this fact, then I think you deserve to lose money because ultimately you do not understand the risk profile of all these different stocks that you're invested. But of course, I would like to hold a very optimistic outlook that a lot of you who are watching my videos already know and are informed and intelligent investors. So I will also be discussing about this idea of an average investor and how much disclosure is proper and sufficient disclosure for investors. That will be discussed later in the slide. So the SEC current requirement is that the companies have to state whether they have received permission from the Chinese authorities to IPO, as well as to disclose the risk that the permission to IPO might be rescinded, and also disclose the possibility that they could be delisted if the US auditors aren't allowed to review their papers within 3 years. So I believe these are the current requirements and it's true, and they should be a lot more transparent about understanding, or at least be more transparent to investors that hey, all these different disclosure requirements and these different risks involved. So now, talking about how much disclosure is proper disclosure, let's just take a look at Didi's SEC's disclosure, by the way. So I believe a lot of you actually didn't even bother reading SEC's disclosure. I touched my heart and I asked myself, I probably also just skimmed through and I do not go into the details. Essentially, the entire disclosure document is few hundred pages long. Every time I'm interested in one company, I will have to go through all the different disclosures, and that will be extremely taxing on my time, my effort, and whatever shenanigans that you have. So in this case, the risk factor that was disclosed by Didi started on page 24, and it ended at page 86. We want to do some quick math in understanding how many pages of disclosure did they talk about in terms of risk factors. That's a good 42 pages, by the way. Is 42 pages of disclosure not enough? Look at what the SEC chairman said, Gary. He said that they want to seek specific disclosures and they worry that the average investors do not realize the amount of risk that they involve when they buy into Chinese companies. 42 pages of disclosures and 42 pages of risk factors that was involved for Didi IPO. Is that not enough disclosure? And one of the many disclosures that was done was that our business is subject to numerous legal and regulatory risks that could have an adverse impact on our business and future prospects. And in this case, I think Chairman Xi is also constantly looking over the shoulders of all the big different companies. I would like to believe that a lot of investors who even had the balls to buy into Chinese stocks know what kind of risk that they're getting into. They do not have the optimistic outlook that, hey, Chinese stocks are able to double, triple, or quadruple in the next 1 or 2 years. I don't think a lot of investors have that kind of outlook and that kind of optimism. So in this case, you're talking about saying, oh, the average investors do not know how to invest our money. We need to safeguard all these shareholders' interests. I think you're honestly belittling a lot of all these different investors. And on the contrary, I know some of you might say that, hey, do not put too much hope on all the average investors. A lot of all these meme stock investors goes onto TikTok and dish out financial advice. The funny thing is, a lot of all these people like to invest in very speculative stocks like penny stocks, like AMC, GameStop, Robinhood, and stuff like that. I have never personally seen any TikTok compilation speaking about all these young investors telling you to go and buy Alibaba, Tencent, or Meituan, for example, because those are not sexy stocks. Those are extremely beaten down. There's too much political risk. Everybody is essentially scared of Chairman Xi. So what is the real risk factor, and where should the line be drawn specifically for disclosure requirements? I honestly do not know. I'll allow for all these bureaucrats to go and solve this issue among the two different big countries, but I would like to say that despite whether having 42 pages of disclosure or 420 pages of disclosure, I would tell you that the average investors will probably not have the time and probably not want to spend the effort to go and read through so many disclosure requirements. So maybe you can look into how you can better the system just listening to the advice from a random guy on the internet. Next, talking about the Chinese security market, I also recently came across this very interesting article that was talking about how they're trying to tighten scrutiny specifically on all these different Snowball derivatives. So China's securities watchdog tightens scrutiny on derivative product dubbed Snowball. So Snowball offers a very risky bet on stock market volatility, and the CSRC sent a notice to brokerage urging them to strengthen their risk control on Snowball products and to fully disclose the related risk to investors. So this definitely then makes people wonder, could this mean another wave of regulatory crackdown? Because regulatory crackdown is like the hot topic of China right now, right? So Chinese brokerage sold a total of 469 billion yuan worth of Snowball derivatives in the first half of 2021. And the CSRC's guidance comes amid growing concerns over China's economic slowdown, which has a downward pressure on the stock market. So this entire idea of scrutinizing your stock market, of your financial market particularly, makes you really think back and understand and appreciate a lot more about what happened in the 2008 crisis. So just to jog your memory a little, for those of you who have already forgotten about the 2008 crisis, where essentially the entire housing property bubbles, and there were a lot of ninja investors who had no income, no job, no assets, and they just went out to leverage on buying properties. So the funny thing is, if you were to really come to the entire conclusion of why China, or in particular CCP, wants to do so much crackdown, when people are constantly saying that, hey, the US market is in a bubble, asset bubble, in a stock bubble, in a property bubble, in a crypto bubble, whatever kind of bubble they can say for the US market, there literally is a bubble for every single asset classes. But in China's case, for example, we know that because of the China discount, because of the uncertainty, because of all the volatility that is in the Chinese market right now, a lot of all these people, or a lot of all this smart money, can consider them as undervalued, or some would say essentially just a steal. And that said, even though it's a steal right now, the Chinese regulators are still constantly trying to enforce a downward pressure, trying to crack down in all the different stock market, their derivative market, their property market. Maybe just take the next 3 seconds to think about why would they want to do something like that. Why are they scared? Or what are they scared of? After you have your own opinion, maybe you just want to share your opinion in the comment section down below and we can have a discussion. Because I'm not here to preach anything. I'm not here to be the spokesperson of Chinese Communist Party. Even though I know some of you would like to think that I'm a CCP agent, honestly, I touch my heart and I tell you I'm not. So it's really up to anyone to decide. My guess is as good as yours. So maybe think about it. Why the US can continuously be propping up their economy, while China on the other hand is essentially just trying to cane and trying to make sure that a lot of their companies are in line and trying to orchestrate the entire economy. Just think about it. And with that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!